The 2024 U.S. presidential election presents a stark choice between two competing visions for the future of American tax policy and economic management. Vice President Kamala Harris and former President Donald Trump offer contrasting approaches that will have significant implications for the nation's tax code, fiscal health, and economic inequality. With the expiration of key provisions of the 2017 Tax Cuts and Jobs Act, TCJA, approaching in 2025, the outcome of this election will determine whether the reforms implemented under Trump are extended, expanded, or replaced by a new set of policies. The 2017 TCJA, a major accomplishment of Trump's presidency, dramatically reshaped the U.S. tax landscape. The law lowered individual income tax rates, doubled the standard deduction, and cut the corporate tax rate from 35% to 21%. Trump and his supporters argue that these changes simplified the tax code, spurred business investment, and boosted economic growth. However, critics contend that the benefits disproportionately flowed to wealthy Americans and large corporations, with the middle class seeing only modest gains. The law also added to the federal deficit, an issue that has sparked further debate. In his 2024 campaign, Trump remains a staunch defender of the TCJA and seeks to make its provisions permanent. He proposes further tax cuts, including reducing the corporate tax rate to 15%, arguing that this will incentivize businesses to expand and create jobs in the U.S. Trump's economic vision is deeply rooted in the belief that lower taxes stimulate growth, and he plans to continue using tax policy as a tool to promote American manufacturing and entrepreneurship. On the other hand, Kamala Harris offers a different perspective. She acknowledges that the TCJA provided some relief to middle-income families, but she criticizes its disproportionate benefits for the wealthy and large corporations. Harris has pledged to protect tax cuts for individuals earning under $400,000 while raising taxes on high-income earners and corporations. Her tax plan focuses on wealth redistribution to fund social programs aimed at reducing income inequality. She supports increasing the top individual tax rate from 37% to 39.6% and raising the corporate tax rate to 28%. Corporate taxation has been a central point of contention between the two candidates. Trump's advocacy for reducing the corporate tax rate to 15% stems from his belief that such a move would enhance U.S. competitiveness globally and lead to higher wages and job creation. However, economists have pointed out that while the TCJA did boost corporate profits, there is limited evidence that it translated into long-term growth or significant wage increases for workers. Trump's approach is primarily focused on stimulating economic activity through supply-side measures. Harris, by contrast, argues that corporations should pay their fair share to fund essential public services and social programs. She believes that the current 21% corporate tax rate is too low and has proposed raising it to 28%. Her plan also includes a 4% tax on stock buybacks, a practice she sees as prioritizing shareholder returns over worker compensation. By increasing corporate taxes, Harris aims to generate revenue that can be used to address income inequality and provide more support to working families. Tax credits for families and home buyers are also key elements of both candidates' platforms. Under the TCJA, the child tax credit was doubled from $1,000 to $2,000, a benefit that many middle-class families continue to enjoy. Trump has emphasized preserving these tax credits, while also proposing additional policies, such as exempting Social Security benefits and tip income from taxation. His focus is on maintaining tax relief for working families, preventing additional tax burdens on middle-class Americans. Harris, however, proposes going further by expanding the child tax credit. She has championed making the credit fully refundable, which would provide greater benefits to low-income families who owe little or no federal taxes. In addition, Harris has introduced plans for a $6,000 tax credit for families with newborns and a $10,000 tax credit for first-time homebuyers. While her proposals aim to offer more substantial support to families, some critics have pointed out that tax credits alone may not address underlying issues like housing affordability, which is more closely tied to supply constraints than demand. Another major policy difference between the two candidates lies in their approaches to tariffs and international trade. Trump has consistently advocated for higher tariffs to protect U.S. industries and reduce reliance on foreign goods. He has proposed a universal tariff of 10 to 20% on all imported goods, with an even higher 60% tariff on imports from China. Trump argues that these tariffs are essential for protecting American jobs, but economists warn that tariffs often function as a tax on consumers, leading to higher prices for everyday goods. Harris, while critical of Trump's aggressive tariff policies, has not significantly diverged from the Biden administration's current trade policies. Harris's focus is less on tariffs and more on domestic economic policies, such as investing in infrastructure and workforce development. She believes that the key to long-term economic growth lies in strengthening the domestic economy rather than relying on trade barriers. Both candidates' tax plans have significant implications for the federal deficit. The TCJA contributed to a rise in the federal deficit, and the Congressional Budget Office estimates that extending its provisions would add $4.5 trillion to the deficit over the next decade. Trump's tax cuts are based on the belief that they will spur economic growth, which in turn will generate enough tax revenue to offset the lost revenue from lower tax rates. However, many economists dispute this assessment, arguing that the economic growth generated by tax cuts is unlikely to be sufficient to cover the resulting shortfall in government revenue. Harris's proposals would also add to the deficit, though her plan to raise taxes on corporations and high-income individuals is intended to offset the cost of her social programs. The Committee for a Responsible Federal Budget estimates that Harris's plan could increase the deficit by $1.7 trillion over the next decade. Harris argues that investing in social infrastructure and reducing income inequality will have long-term economic benefits, but it remains uncertain whether the revenue generated by her tax increases will fully cover the cost of her proposals. Social Security and Medicare are also key issues in the 2024 election. Trump has proposed exempting Social Security benefits from taxation, which would provide relief to many seniors but could accelerate the insolvency of the Social Security and Medicare trust funds. Without additional funding, Social Security could face a shortfall in the coming decades, putting millions of retirees at risk. Harris has taken a different approach to Social Security and Medicare. She has not proposed exempting benefits from taxation, but has supported increasing taxes on wealthier Americans to ensure the longevity of these programs. Harris believes that the government must preserve and expand the social safety net to protect vulnerable populations, and her proposals reflect this commitment to maintaining these critical programs. In conclusion, the tax and economic policies proposed by Kamala Harris and Donald Trump represent two distinct visions for the future of the U.S. economy. Trump's focus on extending tax cuts and reducing corporate taxes reflects his belief in supply-side economics, while Harris's proposals emphasize wealth redistribution and funding social programs through higher taxes on corporations and the wealthy. The 2024 election will be a referendum on these competing approaches, with significant implications for the tax code, the federal deficit, and the broader economy. Whether voters choose to prioritize economic growth through lower taxes or to address income inequality through wealth redistribution, the outcome of this election will shape the country's fiscal future for years to come. Thank you for watching.